Okay, folks, welcome to Best Stock Charts for the coming week. We're going to begin with first an acknowledgement of the fact that the audio is not great. I am not working with my normal computer. It is still in the shop, so the audio is not the best, so my apologies in advance. Then, that aside, we're going to segue into a series of stocks, different strategies to be employed on some of these. Some are extreme oversold contrarian stocks, others are momentum stocks, and others are short stocks. And I haven't really been shorting individual names or individual stocks that much of late because we've been in a strong bull run. But what I'm noticing as I'm doing my scans of former leaders, they're now beginning to lose their luster. They're beginning to break down. So the momentum trade is under a bit of pressure. So I'm going to mix it up a bit this week so that we have a wide variety of trades to choose from in the coming week, no matter which way the markets go. We'll be ready to trade in whatever direction the market demands that we go. So in Best Stock Charts, what we do here is an overview of the stocks we're looking at, and then tomorrow on the week ahead commentary, I send out to members a review of the overall markets, what I think that we are looking at in the coming week and weeks. Where do we trade last week? How do we close out the week? Do we expect new higher highs, or do we see storm clouds on the horizon? Then we revisit these stocks I'm about to go over today, and I may narrow them down a bit to my favorites. And then we talk about strategy. We talk about execution. So let's kick things off with 3 extreme oversold stocks. And keep in mind, I haven't done my due diligence as to why these names are so weak. Are they ongoing concern issues? Perhaps. So we all need to do our due diligence before we get involved with the trade. I'm just simply taking a look at my screener right now. We're having a conversation with regard to the opportunity to trade these extreme oversold stocks long. First stock up, ELGX. Endologics. We had a serious break. In early August, we went to RSI below 10. We have seen it trade sideways and drift lower. When I say drift sideways on RSI, not on price, obviously, we have made new lower lows on price. So there appears to be a buyer's strike. Now, when you take a look at volume on Friday, it began to pick up. You did see some institutional demand back here on the 5th. Ultimate oscillator drifting up higher. The ADX signal line is at extreme over bought levels. We have a higher low on Stokes. So Endologics is looking good as we proceed into the coming week, but we're missing one thing. And that one thing, besides the technicals, is a catalyst. And we do have a catalyst for all 3 of these names, and we'll talk about that catalyst, which would cause these shares to move higher in the coming weeks. So if you're not currently a member, sign up for the 14-day free trial offer. Check out tomorrow's commentary. The next extreme oversold stock, Accordia Therapeutics, ACOR. Daily chart RSI 13.37. Can it go lower? Absolutely. So we did see a bounce on ACOR last week, but I think we're going to continue to drift down. I mean, no follow through to the upside on Friday, and while it did make a new daily high, we reversed to flash a bearish key reversal. Now you have the 50-day moving average, which will in fact cross below the 200-period moving average. Don't let that worry you, unless of course we rally prior to the 50-day crossing below the 200-day moving average. As it stands right now, from past history, when you're at extreme oversold levels with RSI in the low teens, this is a non-issue. It's already priced in. Don't go worrying about it. What you should be worrying about is volume. Volume is still relatively high. We want to see volume pull in a little bit, and we want to pull back on all of these charts to historical, weekly, monthly charts, and identify where there are buyers below, where there is historical support below. Absent that information, we are blind men walking around without a cane. So members, tomorrow we will be doing a deep dive into the higher level view of as to where we know there is historical support for ACOR. Iconics Group, daily chart. This is our third contrarian extreme oversold trade. RSI is at 16.78. Can it go lower? Yep. We're not going to go by what Technical Analysis for Dummies says, and it says that you should buy a stock when RSI goes down below 30. That's a joke. You will go broke. Think about it. Now let's say we use that rule of thumb and we bought the shares of Iconics as the RSI crossed down below the 30 level. That was right here. September the 6th. Let's assume we bought at the low of the day on that day. We bought at 32 cents. Congratulations. You are now sitting with about a 30% loss on your investment. Now, volume on Iconics is trending higher. So these volume bars need to be resolved. This is institutional selling. You're not going to fight these guys. Now, we were in an orderly downtrend. Now it appears as though we are going parabolic. The last sellers appear to be moving in and just saying, get this stock off of my portfolio before I have to send out, and this meaning the fund managers out there, before they have to send out their quarterly statements. They do not want this stock on their ledger. Therefore, you'll probably see additional cleaning of house into the coming week. So members, more to come tomorrow on Iconics. Now to our momentum stocks, Align Technology, daily chart. We're almost ready to pull the trigger here. We've been bullish on Align. I will say this, though. I said this at the beginning of my commentary today, and I'm going to repeat it again because it's worthwhile. The momentum trade has been working really, really well for us over the past year or so. Now, the problem is that you're seeing once leading stocks begin to break down. And one of them today is going to be a short trade. So I'll get to that in a moment. It's BZUN, more to come there. Back to Align Technologies, daily chart. We are leaning into resistance at the 392 level. We closed at 390.16. We are very close to breaking out here. Volume was good on Friday in that it rose. Members, we're going to talk about the weekly charts tomorrow to get that higher level view perspective of how Align is setting up. Stokes are rising, RSI is rising, good stuff here. Align Technology, momentum long. Cal-Maine Foods is treated as very, very well. I believe I spoke about this one last week. Let's throw some lines up here. Okay, so we are in a nice tightening triangle formation. We had a bullish key reversal off of the lower band of support on Friday. Volume on Friday was very good. Stokes appear poised to put in a new higher low. That is really good stuff. So Cal-Maine Foods looking good as a long. So members will talk more about Cal-Maine Foods tomorrow on the week ahead commentary. The next chart up is CSCO Systems. I haven't spoken about CSCO Systems in a long, long time. And it is setting up very nicely for a continuation breakout of a bull flag setup. Take note of the Stokes rising, hooking up, higher low, exactly what you want to see. Now, will this be a short-term momentum trade or will it be a longer-term investment? It's going to be the weekly charts and the monthly charts that dictate how we want to trade CSCO. So we'll go over that tomorrow on the week ahead commentary, the weekly and monthly charts. But we have a breakout here on a daily chart. Volume could have been better on this breakout. That's a cause for concern. But the pullback can't be ignored. Nice and orderly, looking strong. The bias is certainly to the upside for CSCO. We're looking at it as a long trade. FEYE. Now, FEYE has been lagging the sector, where you've had Palo Alto Networks, a leader in the space, do quite well. FEYE has been just putting in lower highs and lower lows, but that appears to have now changed. The trend has now gone from lower highs and lower lows to now seeing higher lows, and we are only pennies away from putting in higher highs. So FEYE is looking very good. It's at the precipice of breaking out significantly. We have broken out technically above the upper band of resistance, but significantly we need to see a close above 1671, RSI rising. It has broken out. You have an indicator leading price performance. Stokes are rising. Higher low on Stokes, good stuff, above 50. Volume outstanding. So FEYE looking strong. To our short stocks, BZUN, you could see that this was a great momentum stock for quite some time. That is now over. We are now breaking down, and the market sent a signal right here. We peaked out on June the 11th. On June the 20th, we put in a lower high. Should you have known that that was a peak? Not necessarily. When you should have known was right here as we began to break down after putting in a lower high, and we broke down to new lower lows. By June the 25th, the handwriting was on the wall, and now we are considerably below that level. And on Friday, we flashed a bearish key reversal on the day. So members, tomorrow we'll be talking about our strategy for shorting BZUN. California Amplifier. Not necessarily a stock that has been a momentum stock, once adored, now hated. It has pretty much done nothing for quite some time. And now it appears as though we have a threat of breaking down significantly below the 2275 level. Now perhaps it'll hold, right? We don't want to divine what a stock is going to do. We want to act when it does it. So as California Amplifier begins to break down to new daily lows, new weekly lows, break support levels, then we'll act. Until then, it's only a watch. And folks, don't get me wrong. This is not a foregone conclusion that California Amplifier is going to break here. I want to make that point clear. And in fact, if we were to next week hold support, flash a bullish key reversal, and close at the highs of the week, we may be talking about it as a long. It's in a tight consolidation, but as it stands right now, as of the close on Friday, after flashing a bearish key reversal with our indicators putting in lower highs and lower lows, it is not looking good as we proceed into the next trading week. And that is it for this week, folks. If you're not currently a member, sign up for the 14-day free trial offer. If you're not ready yet, that's cool. Smash the like button on YouTube. Hit the subscribe button. Leave a comment, and I'll definitely get back to you. Everybody have a profitable trading week next week, and enjoy the remainder of your weekend. Be well.